Hello everyone, hope you have an amazing day and welcome to my new blog. Today we discuss about the Employee Provident Fund 1952. So the Employees Provident Fund 1952 is a beneficial legislation enacted for the betterment of the future of industrial worker, as we all know that. On this retirement for his dependents in case of death of employment. So this act is enacted as a social security measure which falls under the ground of retirement benefit. The objective of this act is to inculcate a non-withdrawable financial benefit. So the sum is payable normally on retirement or on the death of the employee. Administrations of the scheme given under this act is done by the central board, state board and regional committee. A chief executive committee appointed and constituted by the central government. Now central board section 5A, executive committee section 5AA, state board section 5B and regional committee. Now boards under the act, constitution and position. Central board section 5. Central board is created by official gazette notification given by the central government. Functions section 6 and section 6C discussion how the central board should use their funds vested on them. Duty of the central board is to send an annual report to the central government of its work and activities also. The central government will submit a report to the Comptroller and Auditor General of India. Comments of central board is laid down before Parliament. Constitution of the following a person as a member, chairman and a vice chairman appointed by the central government, a central provident fund commissioner ex officio among central government official not more than 5%, a representative of state not more than 50, representing the employer of the establishment, 10 people representing the employee of the establishment, 10 people also. Now executive committee section 5AA, state board section 5B, the central government after consulting with any of the state constitute the state board in the following state as provided for in the scheme. Constitute of the state board is done by the notification in the official gazette. Central government from time to time prescribe the duties to be performed by the state board and the power exercised by the state government also. The following scheme will provide the terms conditions subject to which a member of state board is appointed, time, place and procedure for conducting meeting, etc. Every board of trustee constituted under this section is a body corporate. Being a body corporate, it has perpetual sections, a common seal and right to sue or get sued on its name. Now regional committee. Until state board is constituted, the central government may set up regional committee, which is under the control of central government. It works under the advice of the following person. Number 1, central board when matters referred to it from time to time. Number 2, all the matter regarding administration of the scheme such as the progress of recovery of PF Provident Fund contributions and other charges, speedy disposal of prosecution, settlement of claims and sanction of advances. Now appointment of central fund commissioner. The central government shall appoint central provident fund commissioner, deputy provident commissioner and regional provident fund commissioner by discharging his duty. They will assist central provident fund commissioner also. The chief executive officer is appointed by the central provident fund commissioner. Central board will appoint other officers also, employees for the efficient administration of the various schemes Now, EPF features the employer is under a statutory obligation to deduct a specified percentage of the contributions from the employee's salary for provident fund for his future. The employer should also contribute such percentage for provident fund. An employee who get more than 15,000 is eligible for getting the provident fund. The act contained nearly 20 sections and 4 scheduled sections. 7E, F, G, H, M, N is omitted. Section 20 is repealed. Now, applicability of the Act, Section 1 of this Act deals with the applications of this Act. This is applicable to every factory engaged in any industry specified in Schedule 1. So, every establishment in which 20 or more are employed in the organizations, any establishment notified by the central government, any class of such establishment employed 20 or more. This act is applicable to home workers held in the case Mangalore Gandhi Bedi workers and PM Patel's view. So this act is applied when the establishment satisfies the two tests, namely whether there is an establishment is a factory, whether 20 or more percent is employed, which is held in the case. So some workers will not come under this act. They are casual or temporary workers, cannot be considered as employee held in the case. So, not applicability of the act. The act does not apply to the following things. Any establishment registered under the Cooperative Society Act 1912, any state-related cooperative society employed less than 50 people and working without the aid of work power, from the date on which the establishment is set up, where the establishment has only 50 or more persons, after the expiry of 3 years, only 20 or more but less than 50 people before the expiry of 5 years also, which is held in case of VK Vat. So, and tea manufacturing company. Central government also has the power to exempt any class of establishment on such conditions mentioned in the notifications on the ground of financial position, other circumstances of the case which is held in the case of Muhammad Ali, VUOI. So eligibility for getting EPF, any person is eligible who is employed for work of the establishment through contractor. A connections with worker of establishment is eligible for the benefit of the act. This act was continuously challenged on the ground that is discriminative in nature. So Article 14 is violated because it is applied only to the particular class of industry, but the Supreme Court has said that it does not violate Article 14. It is certain classifications of a certain class of industry falls in reasonable classification which is valid. Now, schemes under EPF, Employees Provident Fund Scheme 1952, Section 5 gives wholly unrestricted, unguided directions or to the central government to frame a scheme, and it appears on the other hand that the act is fully or carefully laid down principles to guide the central government, which is held in the case of RPF Commerce. So when they say that this scheme has retrospective effect, the employer cannot be asked to pay the employee's contribution for the period so antecedent to the notifications applying to scheme, because he has no right to deduct the same for the future wages payable to the employee. The payment of the employee contributions by the employer with the corresponding right to deduct the same form of the wages of the employees could be only for the current period, during which the employer also has to pay his contributions also. so which is held in the case district executor. So they were re-employed by the petitioner on a temporary basis. So it was held that the employer cannot be asked to pay a contribution in respect of re-employed employees on the temporary basis, which is held in the case Bombay Printers Limited versus Other V Union of India and others, 1992, LLJ. So 816. So the fund shall be administered by the central board constituted under section 5A of the Act. The scheme shall take effect either prospectively or retrospectively. So employees deposit linked insurance scheme 1976. Now we discuss about this. The scheme established the purpose of providing life insurance benefits to the employees. The benefit under the scheme is to provide the incentives to the members to save more and provident fund account. The benefit under the scheme is linked to the amount of accumulations in the provident fund account of the members. All the members of the employees provident fund schemes are covered as members of the employees deposit linked insurance schemes also. Now, employees family pension scheme 1995, for the benefit for providing family pensions and life insurance benefit, following benefit package is pension for life to the member on retirement and invalidations to the member of the family upon the death of the members, facility for capital return, corpus exertions on an option of formula basis, commutations if pensions up to 1/3 pensions amount, retentions of the memberships of the scheme till attaining the age of 68. So the retirement pensions under the new scheme will be payable on fulfilling minimum 10 years eligible service and on attaining the age of 58 years also. Now EPF form 20 EPF settlements in case of employee's death. So this form is submitted by the beneficiary if the employee is departed to the benefit of EPF and EPS and EDLI. The amount is paid directly to the beneficiary amount or they will send through money order. Form 31, Withdrawal of EPF. This form is submitted for partial withdrawals used for purposes of house renovations, available loans for educations, medical treatments, etc. Eligible criteria will vary depending on the purpose of the withdrawal of the employee. Form 10C EPS withdrawal. This form is used to claim this withdrawal benefit before completing 10 years of service, has attained the age of 58 years but not completed 10 years of services. This form is also used by the family member of the employee in the following circumstances, like employee departed after attaining the age of 58 years but has not completed 10 years of services. An employee who is above 50 years old but less than 58 years who do not wish to opt for a reduced pension can also use Form 10C. Form 5 registrations form for new employees for EPS and EPF. So this form is used by employer for enrolling new employees for his schemes. The new employees will give his personal details. This form helps the EPFO to register individuals who are joining the first time for his scheme. The form should be submitted by the employer before the 15th of every month. The official website of EPFO provides a form where we can download. Now, Form 5IF employees deposit linked insurance. That is insurance as the EDLI scheme claim form. An employee who is contributing to the EPF scheme is already eligible for the employee linked insurance scheme. In case an employee is departed, this form helps the beneficiary to get the benefit. By submitting these forms, the beneficiary is eligible to get insurance benefit of rupees 5.4 lakhs and bonus benefits for rupees 1.5 lakhs, maximum benefit of rupees 6 lakhs. So the form 100D to apply for a pensions after retirement. So this form is used for withdrawal of pension on a monthly basis after retirement. Form 11 automatic transfer of EPF. The employee must fill this form while joining a new company. This is a self-declaration regarding the transfer of EPF. Detailing regarding last EPF account must be filled in this form, whether he transferred to another company. Form 14 LIC policy. This form is submitted to pay the premium amount for the LIC policy. This form should be submitted to EPF Commissioner after getting an attestations from employer. So now Form 15G to save tax deducted at source TDS for any interest that is generated from EPF. This form is submitted to use to online withdrawal of EPF amount. This form is used to withdraw the EPF amount above 50,000 before completing a 5 years of services. Senior citizens must submit 15H for his facility. Now Form 19 settlement of EPF. This form is submitted by the member who is not having UAN number after 2014. Form 2 nominations of the EPF and Employees Pension Scheme EPS. The employee who is under the scheme shall submit this Form 2 for nominations. This nominated person will get the EPF fund amount if employee EPF member is departed. Now EAN universal account number. This universal account number is given to an employee by the Ministry of the Employment and Labour under the Government of India, who is maintaining PF amount is used to know informations or track informations done by his employer regarding his provide provident fund PF within an employee joined in the new organization he has assigned with new PF account after UAN came into existence. The number of the assembled employee, all the PF account associated with multiple IDs or ID of differences organizations at one place. So through UAN difficulties faced by the employee when he or she joined the new organization is overcome with UAN. They can track the activities if there are any payment issues. So uses a UAN. It is a unique number given to an employee which is independent of employees. UAN is used to link all the PF account when the employee is switching his company. An employer can authenticate his employee by verifying this number and KYC documents. Also, EPF passbook can be verified sending SMS, EPFO, or UAN to this number from the mobile number which is registered under Employee Provident Fund organizations. An employee can check his deposit done by his employer through online using UAN number, and you can also get a monthly update regarding your deposit done by the employer. Now transparency through UAN. Through UAN, employee can check the employer is depositing his PF amount periodically by registering on EPF number portal using his UAN. Now EPF calculating and examples. So contributions of the EPF is two part. One is by employee and one other is by the employer. So contributions by the employee is including basis wages and dearnesses allowances is 12%. Contributions on the other part of the employee is 8.33% for employees pension schemes account of employee, 3.67% for the employee provident fund account of the employee, 0.50% for employees deposit linked insurance account of employees, 0.50% is employee has to pay a additional charge for an administrative account minimum 500 rupees, and if there is no contributions by the employer that month, and employer must pay rupees 75 rupees. The interest rate for every month is 8.65, which may differ every year. Interest rate is calculated every month, but it is deposited in the account at the end of the financial year. Now for the example of the employee is getting a basic salary and DNSS allowances at rupees 50,000. Employees' contribution to EPF is 12% of the 50,000, that is 1,800. Employees' contributions to EPF is 8.33%, and 15,000, that is 1,250. Employer contributions to for EPF is subtracted for employees contribution, that is 1,800 to 1,250, and that is 550. Total EPF contributions every month is 1,800 plus 550 is equal to 2,350. Interest for the every month is 8.6%, by 12 is equal to 0.7083%, that is 4,700. So that for the video, my friends. If you like my videos, please subscribe, share my channel. Thanks a lot for watching.